Yo, what's up, guys? It's Trader X again from Soweto. All right, so welcome to all the new faces, everybody who's just stumbled across the channel. Welcome. Feel free to stay. And to everyone who subscribed to the channel, thank you very much for your support. Really, continue doing it, and I'll churn out the content. Right. Okay, so what are we talking about today? So today I'm going to be talking about why it's important for you to be able to identify the trend, right? Especially for supply and demand trader. Actually, for any type of trader, it doesn't matter whether you're trading support and resistance, whether you're trading whatever you're trading. I think identifying the trend is one of the key things that most traders need to understand and take into really not take into anything but understand for them to be successful in the market itself, right? Because like the old saying goes, the trend is your friend until it changes, right? So you need to be able to identify that. You need to be able to identify the trend itself and why it's important. You need to identify the trend itself and when it's about to transition, and that's exactly what we're going to be talking about today, right? So before we go ahead, guys, I also want to just say my videos are all organic. You all know this if you've watched my previous videos. Nothing is pre-planned here. I just record and say things as they come, right? So if you find me annoying, I'm sorry about that, but that's just the way I am, right? Anyway, so let's get into it. Let's get into it real quick. Now, I think everybody who's watched my previous videos would know that I'm a big Wyckoff trader, right? I've always used the Wyckoff method to trade, but there was one Wyckoff law that really got me into supply and demand, and that's the supply and demand law, essentially, where it goes something like, if supply exceeds demand, prices will go down, and if demand exceeds supply, prices will go up, right? And that's essentially what got me into trading supply and demand. And when I started trading supply and demand, I could not believe what I was actually seeing. You know what I mean? And yeah, so I've just I would like to think that I've kind of grown my knowledge of supply and demand, and I've been using it for quite some time. And it's, to tell you the truth, one of the most, well, some people would want to most probably not agree with me in saying, but I believe it is the one true way of trading the markets. It doesn't matter which market it is that you're looking at, be it Forex. I know there's a lot of people that are talking fish paste out there, talking shit about, how supply and demand does not exist in the market. Well, one question for you guys. Basic economics. Basic economics says wherever buyers and sellers meet, there will always be supply and demand. What is it that's happening in the forex market? When you press the red button and you press the green button, what are you essentially doing? You're buying and selling. So what could possibly be? Anyway, this is not rent rental clock, so let's just continue. All right. So the trend. Why is it important to identify the trend? The reason it's important to identify the trend. Really, what got me into thinking about making this video here, recording this video here, is all too often I've come across traders who have taken trades just after the markets have transitioned from, say, an uptrend to a downtrend, or a downtrend to an uptrend, right? And because we are all trained to kind of follow your rules or follow our rules, we kind of forget that some trades could actually go on for years, or if not years but for months, but they could essentially be one of those trades that could make a whole entire year, if you understand what I'm trying to say, right? That's what trend traders do. Trend traders try to jump on them in the market. I used to be a trend trader, right? Trend trader, and I used to be a swing trader. So what you would essentially be attempting to do as a trend trader is, as soon as you see signs of the market transitioning from an uptrend to a downtrend, you want to jump in on that trend or that developing trend as soon as possible, in order for you to be able to maximize your gains, if you understand what I'm trying to say, right? Yes, as price proceeds to go up or down, you still be trading along with the trend itself, but that one trade that you get right at the top of the trend, that's the one that matters. So all too often I've seen quite a lot of supply and demand traders kind of jump on those particular trades, but yet they wouldn't let the markets work. What we kind of programmed to take, to follow our risk to rewards, to follow our risk management, to follow our risk management plans in such a way that we just don't look at what's happening prior to us taking those particular trades. I mean, there's a way for you to be able to tell whether this particular trade could go on, like I said, for days or for weeks or even for years, right? You just have to stop and analyze everything before you go ahead and you implement your risk management, because like I said, most of the traders that I've seen, they always take 3 times, which is the standard 3-to-1 risk to reward ratio. And once after their target has been reached, that's it for them. You know what I mean? Then they come back, what, 2-3 weeks later, and they can't believe how the particular currency pair had dropped from the time that they actually taken their trade or exited their trade, be it a drop or it shot up. It doesn't really matter, but they can't believe that they left quite a lot of profits on the table, essentially. You know what I mean? And that's what identifying the trend would actually kind of attempt to, I won't say alert you, but it would kind of make you aware of I don't know how to phrase this, but anyway, what I'm literally trying to say is, as a supply and demand trader, it's quite vitally important for you to be able to identify the trend as it's about to reverse, right? Or not really reverse, but transition from one to the other, to allow you to actually enter or find those particular trades that you could actually hold on to for quite a long time, essentially. That's essentially what it's about, right? So, let's get into identifying the trend. Identifying the trend is relatively easy, guys. This is one of the most basic things. This is one of the things that I actually learned when I started trading, right? How to identify a trend. Typically in a downtrend, downtrends move something like that, right? They don't exactly move something like that. Sometimes they could, yeah. Anyway, to just get this whole thing moving. It doesn't exactly, the markets don't exactly follow the sequence here, but the sequence that you want to see, let's move to the one on the left here. This is a downtrend, and the one on the right is an uptrend, right? In the downtrend, we already know lower lows at the bottom and lower highs, right, at the top. Right, the lower lows are down here. A lot of people will call these, no, they wouldn't call those nothing, but the lower highs, these are the ones where a lot of people will refer to them as pullbacks, right? So this is the sequence that you would see. You'd see lower lows and lower highs as price declines, right? And you would see higher highs at the top of uptrends and higher lows at the bottoms of the uptrends. The higher lows are the pullbacks, essentially, and the higher highs are right at the top right there. So that's the sequence that you will see: higher highs and higher lows. Again, going back to Wyckoff, lower high, I mean downtrend, basically he's basically saying to us, or low, I mean in a downtrend, supply is king of the hill, essentially, in a downtrend, right? So you want to trade with the trend itself, you know what I mean? So in a downtrend you want to sell, essentially. It's one of the basic things that I learned, and I trust that everybody learned when they started trading. And in an uptrend, demand rules that uptrend itself. So you want to be finding demand levels as price continues to go up, right? So that's essentially it. Now, identifying the trend, identifying that the trend is about to turn is literally quite easy. All you have to do is, take note of the previous low. So in this case, that's the high. So in this case, we in a downtrend, right? So remember, at the tops, we've got our lower highs, right? And at the bottoms, we've got our lower lows, right? So right here, you need to take note of the lower highs as price progresses. Because at any given time, if price finds a level and price starts to retrace back to that lower high and eventually breaks it, you already know that this is on its way to find a high high. And when it's like this, it's easy for you to be able to anticipate a higher low, right? It's easy for you to be able to anticipate a higher low. So essentially, when you see price do that, break the previous lower high right here, then you already know that there is a high probability that once price finds a higher high, it will go down to find a higher low, right? This process here is called a change in behavior. Change in behavior, where price goes from a lower high to a lower low, and from a lower low it finds a higher high, and it goes down to find, well, it finds a higher high. That's a change in behavior. Just before it goes down and finds a higher low, that's a change in behavior, essentially, right? And then an uptrend, same thing, only in reverse, right? So we've got an uptrend, finds that high. Now remember, we are taking notes of all these, right? So we want to see what would happen when price pulls back. We want to see what would happen. So remember, in an uptrend, we've got higher highs at the top and we've got higher lows. Shit, my touchpad is idiotic. But anyway, and we've got higher lows, right? So we take note of those higher lows, right? So if price retraces back, we would automatically be anticipating a higher low to be formed. But if it breaks the previous higher low, right, we already know that we're on our way to find a lower low. And once we find that lower low, price starts to reverse like this, we already know that there's a high probability that price is on its way to find a lower high. And then from that lower high, another lower low, and the sequence will continue. So this is important. This is what you need to be able to identify, right? From a sequence of higher highs, it transitions from a higher high to a lower low, to a lower low, and then to a lower low, a lower high, and then followed by a lower low. This is essentially what you need to be identifying. That is all. That is it. Once you know this, you will then be able to take advantage of every single move that happens in the market, and I'll show you how. Let's jump into the markets here. We're looking at the Aussie yen, right? The reason I'm at the Aussie yen is because it's got a nice, it's got a beautiful example here. Now, remember, the markets won't always do this, right? You need to be able to train yourself in finding, not really, yeah, you need to train yourself in identifying, the reversals, essentially. Not really the reversals, but the transitions from, one trend to the next, right? It won't always be this perfect as this example that I'm going to show you right now. So now let's take a look at here on the left. So we can see the price came from down there to all the way, this is the highest point that it reached, to all the way to up there, right? And then from there it came down here, and from there it went up, right? So now once we get here, now before we go ahead, before we do this, right, let me just explain something real quickly to you guys. We're looking at the daily chart here. So here's how I would find my my trends, right? The major trend, not really the major trend, this is the only trend that I actually look for. The trend I'd identify on a bigger time frame. So in this case, my bigger time frame is the daily chart, right? The reason I do this is because I try to find supply and demand levels on the 4-hour chart and the hourly chart, right? So my lowest intraday time frame is the hourly chart. This is where I predominantly find trades. But if I don't find trades on the hourly chart, I use the 4-hour chart. And if I don't find them on the 4-hour chart, it will most probably be on the daily chart. So that's how I actually do it, right? So I find the trend on the daily chart, and then I trickle it all the way down from the 4-hour to the hourly chart, right? Nothing below that. But you can use any combination. You can use the 4-hour, the hourly, and the 30, or you can use the monthly, weekly, and daily. I know one of the guys in our Telegram group chat, Sia, is more interested in swing trading. So for him, he would follow the monthly chart with the weekly and the daily, right? So he would essentially be putting all his trades, or he would essentially be taking all of his trades on the daily chart, right? But that's really for long-term investment. If you're looking for to be a little bit active, but not like once every month or whatever the case is, I would highly suggest that you look at the weekly, the daily, and the 4-hour. So you take all your trades based on the 4-hour chart, or you take all your trades on the 4-hour chart but based on the weekly. So you find your trend on the weekly, and then you look for trades on the daily and the 4-hour chart if it's not on the weekly. Get it? Sweet. So remember, in this case, the daily chart, the higher time frame is the one that you want to identify your trend, and then the forward chart and the hourly chart is where you're going to want to get, zones in accordance to which stage the trend is in. And I'll show you now what I actually mean. All right, so back to the chart. So we can already see here. Let me mark all of these. You can already see we've got here a higher high, right? So that's a higher high, and we've got here a higher low, and finally we've got another higher high, right? No, higher high. There we go. So once price gets to this final higher high, right? This is what I actually wanted to show you guys. So once price gets to this higher high, right? Coming off of this higher low here, which says text. There we go. Higher low. Coming off of this higher low. Now, once we come off this higher low and we steadily making our way up, we already know, I mean, looking at the left, we already know that, look, we just came from a higher high and we just came from a higher low, and price is going up. There's a huge probability that we are on our way to find a higher low, which is right up there. I mean, a higher high, which is right up there, right? So it's easy to make those connections. You know what I mean? And from that higher high, once we get to that higher high, now look, as price progresses, right? This is how I actually do things. Let me just show you real quick before I show you the transitions and all that shit. So let me grab your attention real quickly to this higher high, right? So is my auto snap on? Get it off. So we're looking now. Suppose we were round about here. Let me get a trend line. So suppose we were round about here, right, at this black line. Let me just make it a different color here for everybody. Let's make it the dark blue. So suppose we round about there, prices round about there, and I look at the 4-hour chart. Oh my goodness, why? And I look at the 4-hour chart and I can literally tell that, okay, price is starting to move up, right? So we would be round about here, right? Now, like I said, if you look to the left, you would already identify that we just came from a higher high previously, higher high, and we found a higher low. And as price progresses, already your mind should switch to, we are going to find, or we're going to establish a higher high, right? Obviously, because look, man, we just came from a higher high and a higher low, right? And if you look to the left still, we're in an uptrend. So the logical way of thinking about this is we are going to most probably try to find a higher high, right? Just before we pull back to a higher low, right? And this is where you can literally anticipate things here. This is where you can anticipate things. So if we were here in this, let's change the color of this real quick. If we were here in this orange, or was it yellow? In this yellow box, let's just say price action was right there, right? I would be anticipating, because look, once we get to that higher high, it's inevitable that we have to go down again to find another higher low, right? So once we get to that higher high, peak of that higher high, what I will be looking for is simple. I'll be looking for a rally, base, and a drop, right? Now remember, in a downtrend, that's what we look for. So I'll be looking for a rally, base, drop, right? Because I would have already known. So suppose now we just come off this high, and we run about, let's just say we run about here, right, at this big bearish candle here. We run about at this big bearish candle. Now I would already know that, look, once I see this happen, all I need to see on my end here is a rally, base, drop in order for me to be able to take my position, right? And it will be in accordance to the trend itself, right? So this is where I would go from the daily. This is where I would go from the daily to the 4-hour, from the daily to the 4-hour, and then to the hourly chart, to just see if I can find any zones that I can actually use in order for me to be able to take the trade as soon as I've identified that the market has reversed. And look here, right off the bat on the hourly chart, here's a level here, but I don't think it was actually triggered. Oh yeah, I think it was. Let's take a look. Right off the bat, I see a level here. I see a level here. No, come back down here. So I see a level down here. So right there. Oh, come on. Right there is where I would have sold, right? Because look, I'll be anticipating that the market is going to reverse, and by the time we get here, I would have already known that okay, we are in a possible, downtrend again on our way to find a higher high. I mean a higher low. On our way to find a higher low, right? So I'd be anticipating that. So all the while, after price has found that level on the hourly chart, say for instance right here, I'll still take my trades in accordance. See there? Take my trades in accordance, and I'd most probably hold that. When I see it come back like this, it's a problem. But anyway, go over to the 4-hour chart again. Just let's just say I took 3 times, or I tried to hold this one and it didn't work out. That doesn't mean that I should just stay out of the market completely. I'll still continue to see if I can find any more levels as price progresses that I can actually take, so I can take advantage of the downtrend. You understand what I'm trying to say? So I see another level here. See another level which could have made for a nice trade. See another level there which could have made for a very, very nice trade right there. What is this? This is on the 4-hour chart, right? That's on the 4-hour chart. That's on the 4-hour chart. There we go. And I try to hold this until we get to that, higher low. You know what I mean? So that's the whole purpose of me finding the trend on the daily chart and let it trickle down to the 4-hour chart and the hourly chart, right? All right. So let's go back to our trend. Okay, so let's go back to our trend here real quickly. There we go. Now let me just remove all of these here real quick. Oh boy. Get off. Let me just remove. Okay, so that really doesn't matter. It's too fidgety. Okay, so we've just came from a higher high. Suppose we've taken our trade right at that higher high, right? So just suppose that price gave us a zone right there. A few days later, after it started to fall off from that higher high, it gives us a zone. We take the zone itself, and we're on the downside, right? We're selling. Now, like I said, we'd be anticipating the price is going to give us a higher low, right? The reason we do that is because look to the left again. The sequence is higher high and higher lows. So from a higher high, it's only natural that we go down to a higher low, right? But as soon as you see this happen here, price goes from up there where you took your trade and it goes down to beat the previous higher low. You already know that we are in a downtrend. Now when you already know that, let's change this. Now this now becomes a lower low, right? When you already know this, and at the smaller time frames, say for instance the 4-hour chart. Come on. Say for instance the 4-hour chart, right after it just beats that low right there. At the 4-hour chart, when it transitions here and you get a drop base rally, run about anywhere here. When you get a drop base rally, you already know that you're going to be holding that, right? You hold that in anticipation of price finding what's next after a lower low, a lower high, a lower high. And once that lower high has been established, look what happens here. You get a beautiful zone. You get a beautiful zone based on the daily chart right there. Right at the top. You get a beautiful zone right there. You take that with confidence. You can hold this with confidence, knowing that this could be that one trade that gives you that big, big reward. So all you'd have to do essentially is identify your trend, right? And you could make quite a lot. I mean, look at this trade here, for instance, the one that I just mentioned here. Look at this trade here. We get a nice zone price. Price gets out of there, breaks out of there quite nicely, and then comes back within a few days later, bobs along there for a few days later, for a few days after, and then it drops off, and it goes into this major downtrend. Had you identified this lower low here, and you knew that once price, reverses from this lower low and goes up, there's a high probability that we're going to find a lower low, a lower high, not a lower low, a lower high here. Let me change that. Let me not confuse anybody. That's a lower high right there. You know what I mean? So all you had to understand is from this lower low down here, when price advances to the upside, you already know there's a high chance that price is going to find a lower high. And when that lower high happens, surprise, surprise, you get a beautiful zone there. And what is this? With a rally, base, drop. And that is exactly what we look for when we sell. Rally, base, drop, and we wait for price to come back to that base and we sell. And look at it, beautiful zone on the daily chart, and that would have been a trade that would have made somebody a ton of money, right? And typically, and I go into the hourly charts or the 4-hour chart, where is that high? Try to refine it a little bit. Now I'm just, there you go. Now I'm just, sorry guys, just wanted to show you something. This is a level within a level, right? I will discuss this in the next video. Levels within levels. Sorry guys, I'm for some odd reason I just deviated from what we were talking about. Okay, so but let's wrap this up real quickly. So essentially that's what you'd need to do. You'd need to only identify where the trend is, and and trade in accordance essentially. Let's just go back to the hourly chart, to the daily chart here real quick. Now let's take a look at current price. Let me see if I can. I'm gonna bit for me again, just a few seconds. I just want to see if I can get this. Do I have any Wi-Fi here? Okay, I don't think I have any coverage here. Ah man. Let's see if I can get connected and get my charts to update. Okay, so we're looking at still, right, Aussie yen. I'm still looking at the Aussie yen. Now, when you look at the Aussie yen, like I am right now, let me just see if is this off? No, it's on. Okay, there we go. Let's see if we can connect and have my charts update. So I'm looking at the Aussie yen again. This is current price, right? So now what you need to be doing is you need to be identifying what's going on with price right now. But as we can see right down here, there you go. I've got a connection. There we go. So as you can see, this is what price is doing, or this is what price did prior to where we are at right now, right? And from here, you can literally see what the hell is going on. Let me just show you quickly what's the lowest. The lowest is here, and current price is here. Yeah, we connected. So current price is right there. What is the most likeliest thing that's going to happen here? Let's mark this real quick. So I've got here a lower low, right? I've got a lower high here. I've got a lower low here, right at the bottom. I've got a lower high here. Okay, I lost connection. I've got a lower high here, and it's back. And what is this, guys? What is that? That, ladies and gentlemen, is a higher low. So what do we already know from the sequence of an uptrend? Higher highs and higher lows, right? Higher lows and higher highs, higher lows and higher highs. So what's the most likeliest thing that's going to happen here? What's the most likeliest thing that's going to happen here? We're going to be finding a higher high. So wait for price to find us a higher high right here. Can you see that this lower high has been taken already? Price has taken that already. So now we can confidently say that pound yen has transitioned from a downtrend to an uptrend. Confidently say that. So now once price finds a higher high, we can clearly, or we can be confident that, you know what, the most likeliest things that's going to happen is we're going to find another higher low before we make another higher high. You see that, guys? So that's all that you need to do. Now if I go over to, this is current price, right? If I go over to the daily chart, not my intraday time frames. If I go over to my intraday time frames, round about here, let's go over to the 4-hour chart. Here is where I would have been looking for my drop base rally, right? Because I would have been expecting a higher low here. No, I wouldn't have been expecting a higher low. I would have been expecting right here. I would have been expecting price to go down to find me a lower low, but it came short and established a higher low, right? So right here, as it was doing that, I was going to still be expecting a drop base rally, irrespective of whether it was actually, or this low here was a lower low, right? Because from a lower low, we already know we need to go up to find a lower high again, right? So irrespective of whether price is going to find a higher low or a lower low, I'd still be looking for drop base rally. I hope you guys understand this. So I would have been looking for that here in this yellow box. Let's see if we get something on the daily. Is my auto snap on? Yeah. On the hourly chart, rather, not the daily. On the hourly chart, I see something. But man, oh man, it would have worked out. I see something right there. Not the best. I must admit, right? I would have been pushing it a bit here. It's not really the best, but anyway, I'd be trying to find that. So the only thing that I'd be interested in trading is a drop base rally, right? To the upside, essentially, to the upside in the yellow box or even after. So suppose we don't get anything, because that's more often this is what's going to be happening. You will not get any zones whatsoever. So we start at the daily chart. Let me just see if I had anything on the daily chart. Nothing. This is one massive zone though on the daily chart, right? One massive zone here on the daily chart, right there. So if price decides to come back down here, it'll still be a higher low, and I'd expect prices to go up. But if price comes back down here, I'd most definitely be taking this trade here based on the daily chart. So if I go over to the 4-hour chart, like we saw, I didn't get any opportunities here in the yellow box or right there at the higher low. At the hourly chart, I didn't get any more opportunities as well right there. So things like this will happen, right? And could have argued for this one here, where you get something later. It didn't make it, but let me see. Stop would have been hit here. But if you had given it a little bit of room to breathe, this would have been a nice trade to the upside. And essentially, that's all that you do. That's all that you have to do in order for you to be able to successfully trade supply and demand. What you need to be doing is you need to be identifying the trend. You need to be identifying the trend itself based on the higher time frame. Once you've identified the trend, you can easily anticipate what's going to happen, right? So in this case, once we came off this last lower high here, we would have been expecting a lower low to fall. So at the lower high, had we had price given us a zone, a rally based drop zone, and it come back and test that zone, we would have been selling to the downside, right, in anticipation of price giving us a lower low, right? So even if price, where's my arrow, even if price found this higher low here, still we would have still had a trade from this lower high. Had price decided to give us a zone right there, we would have been selling it, because we would have known that we just came from a lower low to this lower high. Chances are prices are going to decline, and therefore you trade in accordance. And once, now remember, we would have been expecting this trend to continue to go down to beat this lower low and give us another lower low at the bottom, right? So when this happens, we already know that we need to get out of that trade as a higher low is about to take place, right? And the only time that we were going to get out at this higher low is once we got another zone telling us that we need to get out. I'm going backwards. But once we had another zone telling us that we need to get out, and the trend has or is or not really is, but yeah, the trend is about to reverse, or we just, or price just came short of it finding that higher at that lower low. I hope I'm making sense, right? All right, so as I was saying, guys, let me just cut this short. How long has it been now? It's been 35 minutes. Let's just cut this short real quick. So this is one of the things that you need to be aware of as a trader in order for you to be able to successfully trade supply and demand, right? The next thing that I'm going to be discussing with you guys is there's a number of things that I actually want to discuss with you guys. I want to discuss with you, what happens in a trend, how you can identify, not really how you can identify because it's quite hard to identify whether banks are transacting, right? But I'm going to show you the probabilities, not really the probabilities, where they are most likely operating, where they pump in most of their orders, in terms of the trend itself, and how really the trend is made up, or yeah, how the trend is formed in the first place by the banks themselves, right? And then the last one I think I'm going to be talking about, but I'll confirm in my next video though, I'm going to be talking about time, how long you need to wait for price to come back to a particular zone to make it a valid one, right? And we'll go through the time frames, like your daily, your 4 hour, your hourly, and I'll give you the times. Now you need to bear in mind that those are only going to be guidelines, right? Not set in stone, so you could change those. So when I give you those to you, you can go ahead and use them. Don't use them, it's completely up to you. And the last video that I'm going to be doing, which I think I should be doing right after the how the trend is formed, is levels within levels. So we'll go through that. We'll go through a level within a level. So a day, let's say you find a level on the daily, and there's another level within the daily level on the 4 hour, and there's another level within that 4 hour on the hourly chart. You know what I mean? So we'll go through that, and I'll show you how to trade key market reversals, right? Essentially, key market reversals, referring to other bigger time frames. Other than that, guys, it's been, let's see, 37 minutes, 38 minutes. Wow, that's a record. I don't think I have a tutorial that is shorter than an hour. But anyway, this one has been 37 minutes. And I hope I've cleared everything up for most of you guys, right? Yeah, so please remember, guys, identify your trend. Look, if you're like me, you forgetful, rather mark your lower highs. I mean, put notes on your charts, put notes, put lines to help you in making better decisions in the market. I've seen a lot of people make stupid decisions in the market, all because they failed to identify a few things that could enhance really their trading. But yeah, do that. Leave your lines just as I did here with the lower highs and the lower lows. If it makes things easy for you, whatever it takes. You know what I mean? Whatever it takes. But anyway, guys, thanks once again for tuning in. Really, really appreciate it. And look forward to my next video. I'll confirm with you guys. Oh, well, I won't confirm with you guys. You just have to wait and see. But I think it's going to be, it has to be, not I think, it has to be, how the banks trade, the Forex market, and how you can use that to your advantage when you trade supply and demand. It's not really a step away from, the finding the trend or trading with the trend itself. It's just all going to gel together, so it's just going to give you this bigger picture. So I'm just going to be explaining every single aspect in depth, right? And at the end, we're just going to put everything together. You'll see how it all fits in. But yeah, like I said, thanks once again, guys, for tuning in. Really, really appreciate it. And I hope this changes the way you trade supply and demand. Other than that, I'm out. And to all the naysayers, go ahead and test it. Rather test something before you talk shit about something. You know what I mean? It's hard to change someone's beliefs, and I hope I've changed your beliefs now if you're a naysayer. But like I said, Yeah, anyway, it works. Supply and demand really does exist. It doesn't really matter what you're looking at. Anyway, guys, I'm out. Thanks once again. Adios.